Hi friends, welcome to A to Z Learning channel. Yesterday, Bandhan Bank published its quarterly results, the third quarter results of the current financial year. Yesterday was a day which was full with massive results. Reliance Industries, the largest company in India, published their results, and number of other companies also published their results yesterday. As a result, what happened was the coverage that Bandhan Bank's results deserved, they didn't get that much coverage in the newspapers, news channels, and various other publications. Reliance, rightfully being the largest company, is claiming most of the space that's there in terms of news coverage today. So I thought that let's kind of do a deep dive on Bandhan Bank. Bandhan Bank remains a stock which is heavily invested by retail investors, and that's the voice we want to shout for. And that's the reason we've come up with this video where we will kind of go through the detailed results of their third quarterly performance. We have got only two requests as our viewers to make. The first one is, if at the end of this video you feel our content, our presentation, our video is good, then please do not forget to press the like button. And the second request is, if you have not subscribed our channel A to Z Learning as yet, please do subscribe our channel and become part of our viewers family. So without any further delay, let's start our video. As I said, Bandhan Bank, just as a reminder for people who are not up to speed in terms of their recent results, at the end of September, which were second quarter's results of the current financial year, the bank had its worst results in its history. They reported a loss of 3,000 crore on the back of heavy provisioning that they had to do as a result of pandemic-led collection inefficiencies, people unable to pay their dues, and West Bengal and Assam government as part of their kind of state, I guess, elections were promising left, right, center, the waiver of loans and so on. So Bandhan Bank suffered really, really badly, and there were a lot of question mark on Bandhan Bank's future on the back of September results. Their stock price, which was trading somewhere between 350 and 360, 370 level, dropped down to almost 250. So massive drop in their share price in a matter of 6 to 8 weeks. So this result, this quarter is a critical quarter for the bank to see whether all the kind of bad news is out of the way and the bank is on the mend or not. So it's very, very important to see what this quarter brings in for a retail investors in Bandhan Bank. So let's kind of talk about the key highlights first. Start with net profits. Overall, happy to report that the bank has produced better profitability this quarter. If I compare Q3 results of this year with the Q3 results of last year, then overall bank's profitability has improved from a level of 633 crore to 859 crore, which is almost 36% year-on-year growth. So net profits, a big thumbs up to the bank. It's bouncing back, looks like. Net interest margin, which is another key metric for any bank's performance. Just to kind of set the context, a net interest margin of higher than 3% is seen very good in the banking industry. The bank has historically maintained very high level of net interest margin because the nature of their loan is such that they disperse small amount of loans, but then charge they have got good kind of interest margin on those loans. So their net interest margin at the end of quarter third stands at 7.8%. Again, in the context of 3% being seen as a good number in the banking industry, 7.8%, any retail investor would take with an open arms. And this 7.8% is an improvement of 20 basis points from last quarter. So quarter on quarter, there is an improvement in the net interest margin. Though when you compare it with the last year, year on year, it's a number which stands uh, almost 50 basis points below the last year. So last year number was 8.3, now it is 7.8%, but that's explainable due to what bank has seen. And banks kind of gradual diversification from those small loan microfinance business to a more broader business where they are also doing home loans, retail assets, and commercial banking. So overall, net result of 7.8% net interest margin is a very, very good number, and bank clearly on a quarter-on-quarter basis is definitely on the mend. CASA ratio, which is the cheapest way for any bank to raise money, which then they use to lend to their customers, stands at 45.6% versus 44.6% in the previous quarter and also 42.9% previous. So year on year or quarter on quarter, CASA number has improved for the bank, which is a very, very good news. CASA as a context for banking industry, I would say any number which is more than 35% is seen very good. And in that context, Bandhan maintaining a CASA ratio of 45.6% is fantastic. Capital adequacy ratio, it's down relative to last year. Last year they were at 26.17%, now they're 20%. But again, capital adequacy ratio as a benchmark, I would say banking industry, a number of more than 12% is seen very good. So 20%, though it's reduced from last year, it's still a strong number compared to what a banking industry typically experience. Now the next benchmark, the next metric is very important for Bandhan Bank. This is non-performing asset metric, and this is where the bank really struggled in the previous quarter and reported a first time, I think, loss in their history. The gross NPA currently stands at 10.81%, which is broadly in line with what they reported in quarter two. So the good news is that in spite of pandemic, the third wave, there's very little impact that they are seeing in terms of their non-performing assets. So they haven't grown their non-performing assets, so it's being maintained at the same level, though it's significantly higher than what bank used to experience. If you look at the year-on-year number, last year their gross NPAs were at 1.1%, whereas now they stand at 10.8%. So you can see the struggle that the bank has gone through in last 1 year. And the first half of the current financial year was particularly tough for them in terms of recoveries and non-performing assets. When you look at the net non-performing asset, again, as a context, banking industry, a good bank maintains their net NPA at 1% or below. Net NPA for Bandhan is currently at 3%, just over 3%, which is in line with the previous quarter, though slightly improved from previous quarter. But relative to last year, when they had only 0.26%, they are at very, very high level. And that's the real issue. But the good part is that this problem is stabilizing and slightly showing the signs of improvement quarter on quarter. So that sort of kind of covers the kind of key metric, but there are some of the other things that are important for us to discuss in the context of Bandhan Bank to fully appreciate and understand what the future holds for this bank as an investor. So first of all, the bank is reported tremendous growth across all parameters that they have, whether it's loans, advances, deposits, they're growing really, really well. So very, very good quarter for them, this one. Collection efficiency, which is an important benchmark for them, is improving very, very strongly. If I share some of the numbers, the previous quarter, the collection efficiency was 81%. So if they were lending 100, they were able to collect only 81 out of that. And that number has bounced up and it's now at 91%. So 10% improvement in their collection efficiency. Last quarter, they also restructured their portfolio, and that was basically the portfolio which was under moratorium or the portfolio which they felt very little chance in terms of recovering money. immediately. So they restructured that portfolio, and they called that out in the previous quarter. Their total exposure at the end of second quarter was, I think from memory, about 90 billion Indian rupees. That exposure is now down to 66 billion Indian rupees. So in spite of that portfolio being under moratorium, their customers continue to pay, or some of the customers continue to pay them. And therefore their exposure has reduced by 27% in the last quarter, which is a fantastic, I guess, improvement in last 3 months. And if you look at from a long-term perspective, the bank, which was known and predominantly doing a microfinancing loan where emerging entrepreneurs were given very small amount loans, those small amount loans were always subject to risk in terms of repayment, and particularly when pandemic hit the country, these were the entrepreneurs which were finding it very hard because they were not able to sell their stuff, they were not able to do their business, and hence their ability to pay to the bank the loan amount was heavily restricted. Bank's vision for next 5 year, and they're saying that up to 25 financial year 25, they will have pretty much 70% of their business coming from other sources, and only 30% of the business, 30% of their loan book will be this microfinance emerging entrepreneur business. And that will also help them diversify. They're diversifying in the areas such as home loans, retail loans, commercial banks. So that will collectively, home loan, retail asset, and commercial bank will give them 70% of their loan book in few years' time. And the bank is progressing really well. When I look at the latest quarterly results, it appears that they are already at 50%. So 50% of their business is coming from this diversified new areas like home loan, retail asset, and commercial bank. And the remaining 50% is from their traditional microfinance business. And we are still 3 years away from their target financial year of 25. So in 3 years' time, looks like the bank is on track to achieve that diversification of 70%, 30% loan book. So overall, where does it lead us, and what does it mean from the way forward perspective for this bank? As you can see, that the banks across all the key metrics is either maintaining or improving. And the areas where it is improving, it's improving quite strongly. And growth is definitely part of the fabric in the bank. Collection efficiencies are great. Diversification journey is absolutely on track. NPAs are stabilized and slightly improving. CASA, net interest margin, remains at strong level, and profitability has bounced back with 35% year-on-year growth. So overall, when you look at, definitely I get the confidence from the latest quarterly result that the bank is definitely on the mend, bank is definitely bouncing back, and therefore, as a shareholder or as an investor in this bank, I feel a lot more confident for the future of this bank. So, and I think some of this is already reflected in the stock performance recently. In last, I would say 2 to 3 weeks, the stock price has improved almost by 15%, and that's a great story. And I think these results sort of validate that upward journey that the stock is seeing in the market. So from a future perspective, I definitely see that it's a matter of time from a mid to long term perspective that the bank does have the potential to deliver maybe 20 to 30% return in the next one year period. So overall way forward is very, very promising and very, very strong from in my opinion. So I hope that this quick deep dive on the highlights of the latest quarterly results of the bank has been helpful for you. We would look forward to your comments on this video. If you have any suggestion, then please do not hold that back. Let us know those suggestions and comments on this video. And if you think we are doing a good job, then please do not forget to press the like button. And if you've not subscribed our channel A to Z Learning as yet, please do subscribe and become part of our viewers family. Thank you so much for watching our video.